guys, welcome to another video. So in this video, we'll take you through our full analysis on Air New Zealand, whether it's a stock to buy or sell. And towards the end of the video, we'll share with you a key finding that we found while reading Air New Zealand announcements that blew us away and completely changed our thoughts on the stock. Just a reminder, if you're new to our channel, do hit the subscribe button to keep updated on latest videos where we do full analysis on very popular stocks. Before we get started into what's happening now, we need to step back and look into Air New Zealand's history to see how events have impacted their performance in the past.
Originally, Air New Zealand was actually called Tasman Empire Airways Limited, and it was only in the 1965 when the New Zealand government bought the whole company and renamed it as Air New Zealand. Then in 1989, Air New Zealand was privatized, meaning the New Zealand government was no longer the majority shareowner. And this was fine for many years until the year 2000, when Air New Zealand decided to acquire Ansett Airline. And this turned out to be a big mistake. For the financial year ending 2001 June, Air New Zealand reported $1.4 billion in loss. Because of this loss, Air New Zealand was close to bankruptcy. So the New Zealand government stepped in to save them by becoming the majority shareholder. And this was done by injecting up to $885 million in loan and equity investment by the New Zealand government. And just for the reference, in the year 2000, Air New Zealand was trading at $10 a share, and by the end of 2001, the share price dropped to $1.50.
The reason Air New Zealand was trading at $1.50 wasn't only because of the loss they made, it was also because in 2001, 9/11 happened, causing a lot of fear in the airline industry, affecting all airlines. As a result of 9/11, U.S. airlines were down 31%. And because the U.S. airlines were down, it was natural that all around the world, every airline took a hit. So moving forward in the years, in 2003 the SARS outbreak happened, and then in 2004 the oil price surged, causing the airline industry in the early 2000s to be in constant downtrend due to these external factors. Out of the major airlines at the time, Delta, United, Northwest, U.S. Airway, American West, all filed for Chapter 11 bankruptcy, and many of them forged a merger with each other in order to survive. So from history, you can see that the airline industry is very fragile, and a lot of external events could impact the airline in a big way.
So now that we know a little bit about the history, let's compare this with the current events and see if they are relevant. In March, COVID-19 caused 40% less air travel globally, with some airlines now cutting over 80% of their capacity due to travel restrictions. We know from history that 9/11 and SARS outbreak negatively impacted air travel, but the COVID-19 figures are much worse.
While things look grim and demand is low, it is still a plus point for the airline industry, at least in the oil department. Unlike the 2004 situation when oil prices were skyrocketing, right now, because of the price war between Saudi Arabia and Russia, oil has dropped significantly, to about 50% its pre-COVID price. Now that we've looked at the external factors, let's take a look into the financials.
Currently, Air New Zealand is trading around $1.25 with the market cap of $1.4 billion. If we just look at the past performance, Air New Zealand has been doing really good in the past 5 years. In the last 5 years, they have been earning $350 million in profit, or 30 cents per share. Now, this is a really attractive number for a $1.25 share if Air New Zealand can survive and recover within a year. But we don't know how bad COVID-19 will affect Air New Zealand from bankruptcy, so we need to check how strong their balance sheet is. So if you look at their balance sheet as at 31st of December 2019, you can see that Air New Zealand was holding $1 billion in cash, with total current asset being $1.7 billion. But their current liability is $2.6 billion, which doesn't look very positive for the survival of the company. Right now, for Air New Zealand, there are no new financial statements since the arrival of COVID-19. However, if we look at the first quarterly losses made by the U.S. airlines, Delta $534 million, United Airline $1.7 billion, American Airline $2.2 billion, Southwest Airline $54 million. Based on this, it is with certainty we can say Air New Zealand will make huge losses.
Having said this, the New Zealand government is a majority shareholder in Air New Zealand and is providing them with a loan of $900 million. Now you might be thinking, if the New Zealand government is just going to bail them out by giving them a loan, it's probably a safe bet to buy Air New Zealand, right? Well, with loan comes a lot of interest. The interest on the loan is 7 to 9% per annum. which will result in around $70 million in repayments just for the interest. Now for that one thing that we found that was so shocking that it completely changed our thoughts on Air New Zealand. In the terms of the loan, it states that the government has the ability to seek repayments after 6 months by issuing new shares through capital raising or turning that loan into equity, which may cause dilution. Now, what is dilution? Dilution can be a very dangerous thing. Think of it as in New Zealand, it has 100 shares in total, you own 10 shares, which means that you own 10% of the company. Now, let's say for whatever reason, Air New Zealand needs to raise money. They will do that, or could do that, by issuing new shares. But in this case, let's say they issue new shares. They issue an extra 100 shares, which brings the total supply to 200. Now, so because the supply is 200 and you still own 10 shares, that 10% becomes 5%. So now what this means is that your shares are literally cut in half. Like the value of the shares have been cut in half. Because they increased the supply, or they doubled the supply, the amount you own is halved in value. Now that the shares have halved in value, what does it mean on price? Well, if the value is cut in half, the share price will also cut in half at the same market cap. Okay, now taking the real example into consideration. So currently Air New Zealand is trading at $1.20, I think. And if dilution were to occur, if everything else stayed constant, like the fundamentals and like their market cap, price per share will fall drastically because they're still valued at the same, but because the supply increased, the value per share has been decreased. We hope you understand what dilution is, and if you didn't, don't worry about it. We'll make another video in our beginner series to explain dilution in a more simple manner for you to understand. Now, let's make a summary of all the reasons you should buy and all the reasons you should sell, so we can get a clear picture. Starting with the reasons we should buy. Number 1. Just like in 2001, when the New Zealand government saved Air New Zealand from bankruptcy, it is doing the same this year by giving them a loan to help them stay afloat. Reason number 2. If Air New Zealand can recover back to normal quick, $1.25 is an attractive buy. Reason number 3. The stock price has fallen 60% in price. Reason number 4. With the downturn in the oil price, Air New Zealand's $1 billion cost in fuel yearly will be reduced significantly.
Now the reasons you should sell. Number 1. COVID-19 is severely impacting the airline industry, and current Air New Zealand capacity is reduced by 85%. Number 2. They have high interest loans to pay off, yearly interest repayment being around $70 million. Number 3. The government may dilute the shares by issuing new shares to reclaim the loan. Number 4. Air New Zealand may not recover for years. The future is still very uncertain. Number 5. It is likely there will not be a dividend payout for a while.
So that was our full analysis on Air New Zealand. The reason we didn't do any fancy calculations is because the COVID situation is very different, and looking at past performance and doing the math or calculations on those numbers won't really tell us what will happen in the future. Hope you guys enjoyed or actually learned something from this analysis, and hopefully it helps you make better decisions on whether you should buy or sell the stock. If you like this analysis, please do give us a thumbs up, and also if you're new to our channel, do subscribe. We'll be putting out more analysis like this on very popular stocks to help you make the best possible decision on a particular stock. Thanks for watching, guys. We'll catch you in the next video. Hey, what's up, guys? Hope you enjoyed that video, and more importantly, enjoyed that last clip. That was fully improvised, completely with awkward silence, and we found it so hilarious, we thought we would leave it in as the ending. We had a lot of fun filming our very first face-to-face, and even though it wasn't perfect, it's only uphill from here, right? We couldn't fit this bit into the video, but we thought it was very interesting, so we'll leave you with what Warren Buffett thinks on the airline industry.